big focus for markets today is the Reserve Bank meeting at 9 o'clock, and on the meeting the Reserve Bank cut the official cash rate by 0.5%, taking it back to those emergency levels we saw in the global financial crisis of 2.5%. Now the market was pretty nervous running into this meeting. Some people were expecting the Reserve Bank just to remain on hold and the government to do all the heavy lifting for helping the economy at this very difficult time. Some were expecting a 25-point cut, and we were expecting a 50-point cut that we got. So there's certainly plenty of potential for volatility as we waited for that outcome. Now, once that call was delivered, we saw wholesale interest rates drop a fraction. Most market participants were expecting that cut, and the foreign exchange market has worked to see the New Zealand dollar ease just a touch. We're now below 73 cents against the Australian. We dropped around 0.5% initially against the US dollar. We're trading just below 74 cents there. So not too much of a wild reaction in the currency markets. Offshore, the focus continues to be on the Middle East situation. The tensions up there are seeing oil prices very, very high right now. That's weighing on share markets as people start to think these high oil prices are going to affect everything from company profitability through to economic growth. Okay, that's it for today for the data from New Zealand, but across the Tasman we get the Australian employment report, and the Australian jobs market has been steadily putting on jobs, and that's affecting the Kiwi-Aussie cross rate. The Australian economy is looking pretty good these days. We actually saw that yesterday in migration figures. We're seeing reasonable outflows of Kiwis going across the Tasman. We're a little bit worried with all the troubles the New Zealand economy is facing right now. This will continue in the months ahead. So that Aussie employment report will be key for currency markets. Should see the Australian dollar continue to get well supported and trade above parity against the US, and in turn trade very strongly against the New Zealand dollar. That's pretty helpful for us given that Australia is our biggest trading partner. Offshore, there's not too much in the way of data, and that focus is really going to remain on those Middle Eastern tensions and what it's meant for oil prices, which are still trading at over $100 a barrel.